Hey, what's up? You're going to love this interview with Brock Blake, the CEO and founder of Lendio. We talk in this conversation about how his platform facilitated more than $8 billion and more than 100,000 successful applications for PPP funding during the coronavirus pandemic. We also talk about his evolution as an entrepreneur, how he's iterated on his business model, and stay tuned to the end for one of the best challenges we've ever had to wrap up a podcast episode.
You're listening to Going Deep with Aaron Watson. You're going deep.
If you were a business owner that needed a small loan, or if you were a business owner that happened to be banking with a bank that wasn't SBA approved, all of a sudden you were at a significant disadvantage and you were at the back of the line. There was no way for you to be able to get a PPP loan. And we started to recognize that, and that actually became our motivation. We changed our mission at that point from fueling the American dream to saving the American dream, because we just knew there were so many business owners that were disadvantaged, and we had to find a solution for those that didn't have a bank that they could go to.
Brock, welcome to Going Deep with Aaron Watson. I'm excited to be speaking with you.
Yeah, my pleasure. Thanks, Aaron, for having me.
So I want to start off kind of talking about what Lendio is, but maybe this isn't the right way to think about it, but almost like what Lendio was prior to the pandemic. And then we can kind of build on top of that to talk about how it has evolved to meet this, insane new need for small businesses across the country.
Yeah, sure. Lendio is the largest marketplace in the United States for business loans. What that means is think Expedia for hotels or Yelp for restaurants. For business owners that are seeking capital, we have over 300 lenders on our platform. They can come to Lendio, complete an application, and with just one application, and then comparison shop offers from multiple lenders. So you can look at the loan product that's the best fit for you, whether it's SBA loans or lines of credit or term loans. And we call it fueling the American dream, meaning that there's millions of business owners out there that need capital to grow their business or expand their business or hire employees or open a new location or things like that. And a lot of times they go bank to bank to bank applying for a loan and they get declined. And we make that experience much easier and simplify getting a loan through Lendio, one place and comparison shop all the options. So we funded over 220,000 loans and for a little over $10 billion on our platform and growing quite rapidly. So we're quite passionate about helping these small business owners get capital to grow their business.
And is the way to think about it in a similar sense to these other asset light marketplaces? So Uber is the biggest, maybe taxi and transport company, but they don't own any cars. Or Airbnb is the biggest, like residency or what's the word, like hotel lodging company, and they don't own any actual physical real estate. Is it a similar thing here where you're not actually holding the balance sheet of these loans, but by facilitating a large marketplace, there's still a tremendous business to be built?
Exactly. That's a great analogy. And we're not the lender ourselves. We don't hold any of the balance sheet, but we facilitate a significant amount of loans for these small business owners. Right
on. And so can you talk about the other way I've heard it described is when you build these marketplaces, it's like this, like two pistons moving back and forth where you have to get enough supply on, and then you have to get the demand. And then if the demand starts to overshoot the supply, you're kind of like in this constant teeter totter of balancing those two out. Can you talk about like the initial stages of even like the first momentum that you built for the marketplace?
Yeah, two-sided marketplace, you're always balancing supply and demand. And for us early on, we had more demand, meaning business owners seeking capital than we did supply. And so our first few years, we're out trying to build relationships with banks and credit unions and other fintech lenders. It wasn't until about 2013, we launched in 2011. It was about 2013, 2014, where the supply side really started to take off, where we had quite a few fintech lenders and that were catching on, that wanted to grow the number of loans that they were doing and couldn't get enough demand. And so we're coming to Lendio and others saying, I want as many loan customers as you can bring to us. So then from 2013 until really this pandemic hit, we've always had plenty of supply. Lenders wanting as many customers as we could possibly bring them. And so we were always focused on building the brand and trying to get more small business customers to meet the supply, increased demand. Candidly, I felt like for the rest of our kind of history in Lendio, we'd always have more supply than demand. But then the pandemic hit in March. All of a sudden, supply went to zero, meaning that lenders stopped lending, and appropriately so, they couldn't price risk. The rug had been pulled out from under many of the small businesses, and they were being asked to shut their doors or quarantine, and it was hard for lenders to be able to know, is this business in business? How is it going to be affected by the coronavirus? And so lending basically went to zero overnight.
And that's where you guys came in as a facilitator of PPP loans. That you have some crazy statistics in terms of how much, because the other side of it is you're talking about supply collapsing, but at the same time, demand is exploding because there's a bunch of companies that either thought they were on good footing or maybe had some access to credit and need more than they previously had allotted for, and they're upstream without a paddle, so to speak.
Yeah, as we started to see the effects of the pandemic and how many businesses were being shut down and livelihoods affected and employees being laid off, and we were seeing, over 20 million. There was a number there during early or March or April, over 20 million individuals that were unemployed at one point, increasing to 30 million. And we just knew that in that moment, we needed to step up and help. Business owners needed access to capital. We were watching closely the tea leaves of Congress and what they were going to do. And they were talking about this CARES Act, the largest stimulus package in the history of the United States, and how they would allow every business owner in America to get access to what's called the Paycheck Protection Loan, the PPP loans. And we had a decision to make. We could either say, we were going to go all in and we were going to try and facilitate as many of these PPP loans as possible, or we could do like many of the lenders and other players in our industry did, which was, play it conservative and do layoffs and some furloughs and preserve cash. And as we were in that moment, I actually sent a text message to our board. And I don't know if you had heard this, but I was like, we got to go all in. And there was a quote that I read at the exact same time by Winston Churchill. And on March 26th, I sent this to our board members. I said, we have an enormous opportunity that's about to hit us. Here's the message that I'm communicating to our team. And it was this: to every man, there comes in his lifetime that special moment when he is figuratively tapped on the shoulder and offered a chance to do a very special thing, unique to him and fitted to his talents. What a tragedy if that moment finds him unprepared or unqualified for that which would be his finest hour. And it was Winston Churchill. And I used that message or that quote by Winston Churchill to rally our team and say, we're going to go all in. Not only are we not going to do layoffs, we feel like we are prepared. We've got the technology to help business owners. We have lenders that want to lend. We have a training program that can scale. We have technology that's really strong. And so we decided we were going to rally our team. We ended up doing from March 27th to April 3rd, over a 1 week period. We did about 5,000 man hours of engineering to get the technology, the digital application ready to accept PPP loans. We had to build all the piping from Lendio to all of our lenders. We had to allow we brought on 200 financial institutions, banks and credit unions that didn't have technology to offer PPP loans. And so we could build technology and allow them to license our platform and put their logo on it and offer it to their customers. So we onboarded 200 lenders in a matter of about 10 days. We hired about 250 employees. And we just decided we were going to go all in and risk. We weren't sure what the details of the program were. We weren't sure what the economics were. We weren't even sure how it was all going to work. but we felt like the moment was too large and the opportunity was right for us to be able to just go for it. And so this moment experience really changed Lendio forever because of what happened.
And what I'm always fascinated by in talking with an entrepreneur is they're always faced with some constraint. And maybe in the early days, it was the constraint of we don't have enough demand or we don't have enough supply in the marketplace. But and maybe I'm misinterpreting this, but my interpretation of the constraint in that moment isn't a lack of demand on the buy side, on the entrepreneur demand side, because of the size of the loan program, and it did eventually get tapped out. But once the second tranche was unlaunched, there was an enormous amount of supply of the potential capital to be loaned. There's this lack of a constraint in terms of you're a well-funded startup. You're not like looking for the basic capital just to kind of keep the lights on month to month in the way that a lot of other businesses were. It really sounds like in that instance, the constraint is almost just time. Like, do we have the manpower and the man hours to build the tools that we have to process the applications that we have to make the right calls and judgments and strategic decisions that are required in such a emotionally charged, intense period for the company?
Exactly. The constraint, no question, was time. We only had 7 days. The rules were changing every single day. We were trying to adapt to it. We knew that the opportunity was going to be large, but what the opportunity ended up being, probably 10 times larger than we ever thought it would be, because, right when it was on April 2nd, the program was supposed to launch April 3rd. And I sent out a tweet that said basically that Treasury and SBA were kind of a mess at the time. They were fighting, and there was a power struggle, and they didn't have all the details of the program released, and everyone was looking to them saying, give us guidance, and they didn't have it. And that tweet created this incredible press firestorm where I ended up being on CNN and CNBC, and I was in every publication that was out there, which from The Hill, Politico, New York Times, Wall Street Journal, Washington Post, San Francisco Chronicle, USA Today, CNBC. I mean, it was just like literally over 2 days, all I had was press interview after press interview after press interview talking about this.
I remember reading it on Twitter, and like the firestorm of like however many dozens of people like basically affirming like, yes, this guy is dead right, because we have no idea either as the CPA or the lender, like everyone just felt like they were flying blind. So I actually remember that coming across my feed. I don't think I even followed you before that point in time.
So at this point, it was now all eyes were on Lendio, and now the moment even became much bigger. And at one point when we launched, and the crazy thing is on April 2nd, the day before it was supposed to launch, 11:45 p.m., Treasury released a new application. We'd spent all week thousands of hours trying to get the application just perfect and nailed. And literally 15 minutes before the day it was supposed to launch, they came out, oh, just kidding, that application's not right, here's a new one. So my team spent the entire night that night retooling the digital application, and we launched on the April 3rd. We had, at one point during that day, we had 1,000 times more traffic during a few hours than we've ever had in the history of Lendio. Unfortunately, all of our technology and systems held. But it was crazy. There was so much demand and so much urgency. You talked about the emotion of the moment where people were feeling, my business is gonna go up in flames. I need capital. I can't make payroll. My lights are, all these, and seeing that there was only so much capital allocated, and every single day they were kind of nervous that if I don't get approved for a loan, it's gonna run out, and I'm gonna miss out. And so the weight of it all was just enormous. There was so much anxiety and stress and pressure, and the crazy thing is we had, in the first 7 days, we had over 100,000 businesses that signed up at Lendio and applied. And we had 300 lenders that were willing to fund loans on our platform. But by Monday, every single one of those lenders had so much demand with their own customers that they ended up telling us by about Monday afternoon that they couldn't take on any additional customers. And so we had 100,000 businesses and no lenders. Talk about the demand and supply, zero supply at the moment. And we were scrambling. We were so stressed and worried that, we had 300 lenders. So there was no malintent or anything, but all of a sudden that went to zero. And hour after hour, our team was losing hope and confidence. And were we going to be able to pull this off? Should we shut down the application? Can we help these business owners that are coming and applying? And, trying to reaching out to every lender in America. The problem was that the fintech lenders who could handle the volume weren't approved to do SBA loans. And a lot of the traditional banks, not only were they focusing on their own customers, they were focusing on their largest customers. And so if you were a business owner that needed a small loan, or if you were a business owner that happened to be banking with a bank that wasn't SBA approved, all of a sudden you were at a significant disadvantage and you were at the back of the line. There was no way for you to be able to get a PPP loan. And we started to recognize that, and that actually became our motivation. We changed our mission at that point from fueling the American dream to saving the American dream, because we just knew there were so many business owners that were disadvantaged, and we had to find a solution for those that didn't have a bank that they could go to. And so anyways, it wasn't until Thursday night, it's 6 days later, Thursday night, about 9 or 10 o'clock at night, we cut a deal with a lender that allowed us that really kind of broke the logjam and allowed us to send tens of thousands of loan applications over and get approved. And actually it was this huge sigh of relief. We were finally in the PPP business.
Right on. So one of the ways that I've been talking about, I stole this from a writer, Venkatesh Rao, who says that COVID has now moved from the situation to the setting. And I don't want to get into the details of, rising case counts and all that stuff. It really, in the context of being a decision maker, there was that window where it was the situation. It was the all-encompassing scenario that you were trying to make sense of. And then at some point, by week X of lockdown and what have you, it starts to recede into the background and become the setting in which you're operating, and you kind of have to move forward. So as you think about that with Lendio, I can see, on both sides, but particularly on the demand side, again, from the businesses you work with, that this is a huge opportunity for businesses to become familiar with Lendio, to maybe have had this one particularly important experience where they did get their loan originated through using this marketplace, and the potential, probably calculus that you have of the long-term value of, if a business originates a loan somewhere once, their likelihood to do it again in the future. Can you paint more color on the picture of the impact that this has had, whether that's at a revenue level, a relationship level for Lendio, like what the impact is now that we're in this new setting?
Yeah, so we helped over 120,000 businesses secure about $8 billion of loans during PPP. And, for us, it was more about two things. One, helping business owners in their time of need. And if you go back and you can read any of our internal, Slack messages, emails, watch our recordings on Zoom and everything, that was all we talked about. Like in that moment, it wasn't about economics. It wasn't about, what's in the best interest of Lendio. It is our business owners. That is our customer, and they need help. And we're going to do everything we can and sacrifice what we need to be able to help those business owners. Now, I'm not trying to make it sound like we're altruistic and that, and we're nonprofit. That's not my point. But the economics, if we lost money on the scenario, we still would have done it. And because the margins were so small. Sorry, dog in the background. The moment was so great for those business owners. That was the right thing to do. Now, the second thing is that we thought about, if we help them in this moment, we can build a relationship with them that will be beneficial long term. We will be able to help them with future loan opportunities that they need, whether it's an SBA loan down the road, or an equipment loan, or working capital, or credit card, or other things like that. And so the actual goal in the moment of helping them was, and build a relationship. One of trust, where when they needed it, we were there. And so, we're starting to see some of the fruits of that labor, right? We're starting to see some of the benefits of repeat customers, customers that are coming back for an additional loan, customers that are coming back using. We have a product that's called Sunrise that helps business owners manage their cash flow, and with invoice management, expense management, and we have a bookkeeping tool and stuff like that. And the adoption of that product has never been greater because of the relationship we built with them in PPP. So we feel like, in the long run, there will be significant value created, but from the relationships that we've established with hundreds of thousands of business owners that came to us during a moment of need, and we did everything we could to help them.
And all those product lines that you've described, I guess not the bookkeeping and the invoicing, but I see the connection there, where if I have your basically receipts as a business, it makes it very quick, seamless, clear for me to kind of give you a quote as to what type of debt instruments might be available to you. But taking that almost like a step back, I would just say, like, as a business culture, there are a lot more headlines for the big raise where someone sells equity at a certain price, and a lot less, I would just say, legibility about debt markets, understanding, and even, like, as a Midwesterner, there's almost like a fear of debt, like you raise, like, debt's the enemy, debt's scary, bad, and there's plenty of debt that is bad. But maybe if we kind of take it back a little bit, your process in helping businesses with capital started more on the equity front and has evolved to be kind of more debt centric. Can you just take us through a little bit of how that happened?
Yeah. So first of all, I got to kind of respond to that. I've raised every type of capital out there, whether it's credit cards or debt or SBA loans or equity or whatever. And equity is kind of the darling. Everyone talks about it, and everyone, it's like, if you raise equity, it's amazing, and it's a great milestone, and it is, but it's not for everyone. Debt is going to be a lot less expensive than equity, because you're not giving up ownership of your business. And, venture capitalists want 10x their money over 5 to 10 years. Put that into a debt rate, and the rate is going to be 100% a year. I mean, it's the most expensive capital out there. And so if you have the cash flow, in my opinion, and this isn't self-interest, I mean, it may come across as, well, we focus on debt. I believe in debt. I used to help business owners get equity, and I just believe in debt generally as an instrument, because you don't have to give up ownership. You don't have a partner that's coming on board. And if you have the cash flow to do it, it's the best way to leverage capital to grow. And then you can pay that off as your business grows and move on your way. There's no long-term consequences or things like that. So I think sometimes it's scary. I think it's more scary when the reason why it might be scary is, you hear horror stories that, I'm gonna get some debt financing, and all of a sudden I'm going to, I'm not going to be able to pay it back, and they're going to come take my house. The chances of that happening are so extremely low. Most lenders these days don't put up your house for collateral. They have other assets of the business or other things like that. And so anyways, I think it's important for you to be smart. And part of what we do at Lendio, we have a funding manager there to help walk you through that analysis and make sure that you understand all the terms and details of a loan. But in many scenarios, it could be the best thing for you as far as the instrument you can use to grow your business. So anyways, as far as my background, I actually started a business connecting entrepreneurs to investors. And we used two things, kind of like a dating website that the entrepreneur would go and post their business plan onto the website, and investors would look through it, and you would connect through our website. And we did these, we called speed pitching events all across the country. It was like speed dating. You go to a room, and there's a room full of investors, and you go table to table to table, pitching investors your idea. And what I realized is that only a very small percentage of businesses in America are actually going to raise angel or venture capital. It's like 1%. It's those businesses that are going to grow to be $100 million business or a $500 million business, the next, Twitter or Uber or, Slack or, Airbnb or things like that. But if you're a great local Main Street business and you do manufacturing, or you're a restaurant, or you do a dry cleaner or landscaping or construction or things like that, the chances of you raising angel or venture capital are so small, and the difficulty is so large that the overwhelming majority of businesses in America are a better fit for some sort of debt instrument. And once we kind of banged our head against the wall trying to figure out this equity model and realized this is not the right fit for the majority of our customers, and the business model is difficult and flawed, that's when we pivoted in 2011 and learned that business owners need capital, but we need to focus on debt, not equity. And Lendio grew from that.
So was that a business that was wound down and a new one was started, or was it a pivot of the same company to a new model with maybe people being bought out so that the cap sheet would be a little cleaner?
It was a pivot. Although, everything that we did was more like we wound the first one down and then relaunched it. It was extremely painful. We were $10 million in revenue, so generating nearly $1 million a month. And we had about 80 employees. We went from 80 to 8. We went from 10 million in revenue to 0. We had to recap the cap table. But there were, and it was, we had it all planned out of exactly how we hoped it would go. And it was way more difficult than we ever anticipated. And it took us a lot longer, and it was a painful experience. But we had assets that, in the company at the time that we wanted to use for the new company. And I felt like it was in the best interest of those shareholders to get some value out of that. So we did our best to try and kind of recap the company and provide value to our shareholders, and launch a new company as we could. And I think in the end, it ended up working out for us.
Right on. So I'm a pretty big basketball fan, and one of my favorite things is to listen to different players and listen for them like self-assessing when they need to improve. So I remember the summer where like LeBron, he got just roasted because he didn't have the post game, and he spent the whole summer on the post game, and he comes back and he's just dominating guys in the post because he's so big and strong. I'd be curious, like, was there a point during that wind down and that painful process of letting people go where one of the things that you're kind of critiquing and looking at and evaluating is the business model? You're saying we had the wrong business model. We need to pivot to something that makes more sense and has that, potential that we're looking for. But at the same time, Brock, the entrepreneur, I'm sure had to evolve in certain ways. So how did you go about that type of self-assessment? And maybe what were a couple of the elements that were, either weak points in your game or areas that needed the improvement and that you targeted for addressing?
Man, the list is so long. I mean, honestly, I during my early days as an entrepreneur, I feel like I made every mistake in the book, over and over again. Fortunately, or not the same mistake over and over again, but mistake after mistake after mistake over and over again. And it was painful, where you are really being refined as an entrepreneur through the mistakes you're making and through the challenges that you're striving to overcome. The business model was wrong. We were trying to, make that right. The use of technology, was flawed. The data that the reporting and data and infrastructure and kind of the things that what I would call our vanity metrics that we focused on, some things that looked good, but in the end weren't really, what you wanted. And
is there an example of that you could share, like one of those vanity metrics that you just realized, like, whoa, we're putting way too much focus on that?
Yeah, I mean, for us at the time, I mean, revenue is an amazing metric because you can't survive if early on. It's really critical that you focus on revenue generating activities because it cures a lot of sins. But at some point, if revenue is coming at the sake of a not a great customer experience, then it becomes a vanity metric. And for us, one of the things that we did was we were trying to help business owners get equity capital. And what we did is we charged a $99 fee, and we would use that fee to do an assessment of how good they were as how qualified they were to get equity capital. And if they rated high, then we come back to them and introduce them to investors. And if they rated low, then we come back to them with products and services on how we could help them improve their profile and improve their chances of getting equity capital. And so we'd sell them a business plan and a financial model and a pitch deck and executive summary and a website and all these different products and services. The challenge with that is that many of those products and services, you could have the best business plan in the world and the most polished pitch deck you've ever seen and the best financial model. But that doesn't mean that business, if it's a dry cleaner, the likelihood of you raising, venture capital is very little, very small, right? And so, a business owner may pay $2,000 or $3,000 or whatever with the hopes of getting equity capital, but you can't guarantee that they're going to get equity capital. Because it's out of your control. And so $3,000 in revenue may be a vanity metric to a customer who can't get equity capital, and you're doing everything you can with sincere intent. You're not like trying to be a scam or anything like that. You're trying to help them get what they want, but the chances of them getting what they want are very, very small. And so customer satisfaction then it becomes lower, and now it doesn't matter what the revenue was. If the customer isn't satisfied, then you're not going to build a sustainable long-term business. And so what I learned through those painful experiences was focus on the customer experience and the likelihood of repeat customer and customer satisfaction, and really focus on that. When you can combine great customer experience with revenue generation, now all of a sudden that's the holy grail, and it's not a vanity metric anymore. It's actually a scorecard of how well you're doing. And so those were some of the painful but very valuable learning experiences that I've had. And honestly, I mean, being an entrepreneur is how fast can you fail and how quickly can you learn from it, and how much pain can you withstand till all of a sudden you start to learn and like, okay, this is something that I can overcome.
Right on. I guess I should have used Donovan Mitchell for that example instead of LeBron James since you're in Utah.
Hey, I respect LeBron, but yes, I'm a big Donovan Mitchell fan. How can you not respect LeBron?
Yeah. So speaking of Utah, and this is one of the last notes I wanted to wrap up on. Everyone's heard of Silicon Valley. There's a lower quantity of people that are aware of the Silicon Slopes, which is Utah, and all these companies, particularly in B2B SaaS, that have seen really sizable success from, Ryan Smith and growing Qualtrics, and him actually now just buying the Jazz here a couple of weeks ago, to just, name after name after name after name of success. And I'd be curious from your vantage point. I'm not asking you to write the book on it, but, people can kind of, tell a story about a region, and we can say, well, there's all this R&D and the origins of the silicon industry in San Francisco and the Bay Area that led to that. Or I can talk about, Pittsburgh and our history as a steel town and a blue collar work ethic, and the Carnegie Mellon robotics department leading to the robotics industry here. Like, as you think about being in this Utah ecosystem and all the crazy success, what's in the water there? What's so special that's happening in Utah?
Well, there's been some incredible success, and it's a big shout out to some of those that have gone before, whether that's Josh James building Omniture and selling it to Adobe, and some of and so many of the companies that have come from that, or Ryan Smith selling Qualtrics to SAP, and Pluralsight going public, and there's a lot. There's just so many companies. Skull Candy or Health Catalyst, or what are some of the others? But anyways, there's just company after company, right, that have done really well, gone public or had big exits, and it's a very, very entrepreneurial nature here. People really celebrate entrepreneurs. There's a political environment where it's very entrepreneurial friendly. So from a regulatory standpoint, it's more about encouraging and supporting and fostering entrepreneurship. There's a sense of community where it's not about hoarding secrets. It's about sharing openly around what's worked, and other entrepreneurs are very gracious in being able to, those that have been successful, to give back, to come back and invest in early stage startup companies and be mentors and things like that. There's this prolific, because of the Church of Jesus Christ of Latter-day Saints and the missionary program, you've got thousands of men and women that have traveled the world, going out and not afraid to open their mouth and talk to people and knock on doors and things like that, and speak new languages and learn new cultures, and they've overcome hard things. And so there's this spirit of never give up, and this talent of being able to cold call someone, and so sales talent. There's quite a bit of engineering talent that is here, that is growing, and so it is. It's a plus the quality of life, right? You can't go without talking about the outdoors and being able to attract people. The cost of living is affordable. You've got skiing and mountain biking and hiking and golfing and water sports and all that type of thing that's here. So kind of quality of life is good. So there's a lot to it, but it's based on this foundation of building a legacy, building great companies that give back, and this spirit of entrepreneurship that just is pervasive in the community.
Because it's another big question is like, someone who's done it before, and raising money is important, and for those ones that are on a venture track, that is a part of the story. But to some degree, money is fungible, and who comes along with that? The right board member, the right mentor, the right person that's kind of been through some of those hoops, jumped through some of those hoops before, that can actually, at least be an ear when you're, looking at 1000x website traffic in the course of a week.
Yeah. And I think, for sure, the mentorship is just critical component. I think the money aspect is unique to Utah because there's not a lot of seed stage money here. And what that is done, in some ways that's good. In some ways that's bad, because some of the best ideas end up not, getting capital. But in other ways, it's forced companies to figure out, how do I overcome this seed stage in a bootstrapping way? And when I go actually raise money in Series A, that it's to a point where I can, and I've got it far enough along. And so I think in some ways it helps the business become a better business because they're forced to bootstrap early on and not take on seed capital. I think that's a component to it. You could argue either direction, whether it's good or bad, but there's definitely a sense of community that we all want. We all want to help each other, and are proud of the state, and want to build some great companies from here.
Right on. Well, Brock, this has been great. I love talking with you. Hopefully, after the recording goes off, maybe we can talk a little bit of NBA and Jazz basketball. But before I ask my standard last two questions, was there anything else you were hoping to share today that I didn't give you a chance to?
No, I enjoyed the discussion. Great questions. Thanks for having me on. It's been awesome, Aaron.
Right on. For folks that want to learn about Lendio, connect with you in the digital world, what coordinates can we provide them?
Yeah, I'd say go to lendio.com. It's a free service for small business owners. I'm on Twitter as well, just at Brock Blake. And I would love to connect any listeners that are anxious to connect.
Right on. We're going to link that in the show notes along with Brock's LinkedIn profile, goingdeepwithaaron.com/podcast, or in the podcast app where you're probably listening to this right now. This is the best place to find it. But before I let you go, Brock, I want to give you the mic one final time to issue an actionable personal challenge to the audience.
Yeah, as I was thinking about this, I just have to tell this very, very short story. My challenge is that for anyone to be able to identify someone in their life, whether it's their spouse or their kid or a brother or a friend or whatever, and go have an experience with them. Do something where you put down your phones and maybe just throwing the football back and forth in your backyard, or go, have a cup of coffee, or go do whatever it is that where you get to spend one-on-one time with them. For me, that's been critical in my life. When I was early on, I was out raising money, and I had a venture capitalist that had flown in from the Bay Area, and we were talking to them, and he had put down a term sheet, and he was a very high profile venture investor. And so we were very, very excited, and it was going to be our first round. And as we were out to lunch, he said, "Tell me about your life." And I, at the time we had two kids and married, and I talked about my son and my daughter, and we have 4 kids now. But at the time too, and how important they were to me, and how important the relationship with my wife was. And he asked me a question. He said, "So when times get tough, would you choose your work as a CEO, or would you choose your family?" And I said, "Well, what do you mean?" I said that everything depends, right? There's times and seasons, and I don't think I'd choose one or the other really ever. And he said, "Well, in my opinion, I've never seen someone be a successful father, husband and father, and a successful CEO. They're either really, really amazing CEOs and, really, difficult home life, or maybe they're single or whatever, just don't put that much priority on their home, or they're great, husband and father, but they just aren't that really, great at being a CEO and building a great company." And I was a little bit shocked by what I was hearing, because that didn't sit very well with me. And in that moment, I knew that this was not the person I wanted to partner with, and kind of made this personal challenge or commitment in my life right then and there that I wasn't sure if I was going to ever be able to do both. But in my opinion, you could, and I was going to kind of dedicate my life to being not only a great CEO, build a business that leaves a legacy and makes a real impact in the world, but also a great husband and father, and put my phone down and dedicate time and make time to have those experiences, whether it's date night with your spouse or your significant other, whether it's attending their sports games, or just reading with them before they go to bed, or something like that. Create an experience with those that you love, and because that's what really matters most in life. So that's my challenge.
Brock, I don't want to offend a past guest. That is one of my favorite stories and challenges that I think we've gotten on this show. I'm saying that with all candor, because it is, I can just speak personally. I know, CEOs here in Pittsburgh that are fantastic parents, in addition to being fantastic business people. By all accounts, it appears that you are taking direct aim at accomplishing that goal with Lendio. And I think that it is exceptionally important to identify the possibility for having both of those things. And it takes a lot of work. It takes a lot of, I'm sure, diligence and discipline on your part. But that is a heck of a challenge that I think everyone should be take an aim for.
Thank you. Appreciate it. Something I'm passionate about.
I love it. Well, thank you so much for coming on the podcast. We just went deep with Brock Blake. I hope everyone out there has a fantastic day.
Thanks, everyone.
Hey, thank you so much for watching to the end of my interview with Brock. If you enjoyed this conversation, then you will love our conversation earlier this year with Henry Schuck, the CEO and founder of Zoom Info. He talks about taking the company public, becoming a billionaire, and the constant pursuit of excellence that he instills into his entire team. You'll enjoy it.